All right. Good morning, everybody. Good morning and happy Friday, everybody. Today's February 9th, 2024. And the top story this morning is the European Central Bank is warning their member institutions, you guys better manage your risk and your exposure to commercial real estate, notably commercial real estate in the United States. There's been a trickle of stories over the last 2 weeks or so, several of them coming out of Europe. We had just in the last 2 weeks or so, or even in the last week, we had Julius Baer, which is a big investment firm in Europe. I believe they're based out of Germany. No, I'm sorry, Switzerland. I could be wrong about that one too. But Julius Baer, their CEO just resigned. He's been replaced. They posted $680 million in losses tied to commercial property. $680 million for them. You had Azora, which is not a European institution, but that is a Japanese bank. They expect to swing to a net loss this year, also from exposure to U.S. commercial real estate. You had Deutsche Bank reported not too long ago. They posted $133 million in provisions for credit losses, a huge increase, all due to U.S. office building exposure. And then most recently, you had Deutsche Pfandbrief Bank, who posted $232 million in loss provisions, again, tied to U.S. commercial real estate. So there's a word for that when there's something happening in one country and it spreads to financial institutions on other continents. It's called contagion. We're already seeing it in U.S. commercial real estate. And guys, it's just getting started. We're still early on in this crisis. I mean, there's over $1 trillion worth of this debt against these buildings that's going to mature over the next year or so, or year and a half. They've already massed about $1 trillion in losses in commercial real estate across the country. These buildings continue to sell for anywhere from 70 cents to as low as 18 cents on the dollar. I've seen from some of these buildings. And again, we're early on in this crisis. All these commercial real estate institutions and firms out there, they're saying, well, the market is frozen right now and there's not much movement going on. And so it's really hard. There's not enough price discovery. There's plenty of price discovery. They just don't like the prices they're discovering. And so extend and pretend appears to be what they're all going with here. They're all just pretending like these buildings are still worth what they said they were worth in 2021 or in 2019. It's not that. It doesn't work that way, guys. And of course, you've got New York Community Bank here in the States. They're having the same problem. That bank just continues. It's been incredibly volatile. Yesterday, I saw that bank had swung as low as negative 16%, as high as positive 10%, all in the same day. I'm expecting that one to end up in FDIC receivership any moment now. I mean, I haven't seen anything to suggest that was imminent. Just when you see a share of a bank collapsing like that after posting losses, and you see executives scrambling to do damage control, and every time they talk, they make things worse, there's a lot of writing on that wall. So that's what's going on in banking. You've got a lot of worry about European contagion today. You had the Bureau of Labor Statistics just came out a few minutes ago with revisions to CPI. They do this every year. It's an annual thing. And in a shocking turn of events, and I do mean shocking, this is my shocked face, really. The shock here. You can't see it, but it's there. CPI was revised lower. I know, say it ain't so. It's amazing, right? They changed the math, they changed the methodology, and it made inflation look lower. I'm just beside myself with surprise that would happen. I mean, it's not like that's happened literally every year for the last 50 years. So the market liked that when that came out. There was a little bit of a green candle up on that news of the CPI revisions. I guess that means, hey, maybe the 7 or 50 rate cuts that the market wants this year are actually back on the table. Also, Turkey has replaced the head of their central bank. Hafiz Gaye Erkan was the former head of their central bank. She has abruptly resigned to protect her family, her words, amid what she called a smear campaign being led by the lackeys of President Erdogan over there. You may recall President Erdogan has the unique disposition that the way you fight inflation is by lowering interest rates. That's interesting in that it is entirely incorrect and wrong. And so, of course, inflation went as high as 170% in Turkey. And when that happened, Erdogan just said, you know what? I'm going to fire the guy who reports the inflation. And then magic, the inflation numbers came down. It's like, hey, if the BLS can do it, then I'll just do it, and I'll just do it even harder. Well, that's what happened in Turkey. So it was about 8 months ago they appointed Hafiz Erdogan. Now, I remember at the time saying good luck with that, because Hafiz Erdogan, she's actually spent a lot of time working at financial institutions here in the United States. Most notably, she was the former co-CEO, red flag, of First Republic Bank. You may remember that one. That's the, what's First Republic? Oh, that's right. The third largest bank failure in U.S. history, First Republic Bank. She was the former co-CEO of that organization. By the way, all you guys who are doing DDs on companies, if you're ever researching a company and you see that they have a co-CEO, run. Do not walk for the exits. Never go for a company with a co-CEO. I've never seen it end well. I'm sure there's somebody out there who's pulled it off, but when you've got two CEOs, that's like having co-presidents in a country. You're going to have some fighting. It's going to be a CF if you do that. Anyways, I'm knocking Hafiz Erdogan right now, but to be honest with you, I think she did the right thing when she was in there. She very aggressively raised interest rates, which you have to do when you've got 170% inflation in that country. You also have to stop printing the damn money. That's another thing you got to stop doing. But try explaining that to Erdogan, who now he's driven her out. Now, he didn't actually fire Erdogan. He just made her life a living hell so that she quit to protect her family. That is 6 heads of the Turkish central banks in 5 years. They just fire. They put these people in. They do what Erdogan wants. And then things don't go well. Erdogan blames them and they fire them. And then Erdogan came in and she tried to contain the problem. And of course, they just made her run for her life. And so they appointed a new lackey. And of course, he's going to stop raising interest rates and probably start cutting them again soon. And the inflation is going to come roaring back in Turkey. You also got earnings from Pepsi this morning. Interesting. There was a very surprise revenue miss from Pepsi. That really surprised me, and I'm sure it surprised the market, because Pepsi has been raising their prices on everything. See also inflation, and yet they're posting a revenue miss. Big declines in North American sales for Pepsi across all their brand segments. So, I can't help but wonder, is this Ozempic? I mean, I know people are saying this new magic pill that makes you feel full and makes you not crave sugar, and they're saying it's going to take a bite out of all of these junk food companies. Maybe there's some truth to that. I don't know how widespread the use of this pill is, but Pepsi reporting double-digit declines in revenue in North America, it takes a lot. That is a seismic shift in the way fat Americans stuff their faces with that garbage to get a decline in Pepsi earnings, especially amid inflation when Pepsi has been raising their prices. So maybe there's some truth to this Ozempic story. Now, the decline in North American sales was partially offset by a very surprising surge in Latin American sales. And I was talking about this one with Mish this morning in our morning phone call. He seems to think that may be driven by a surge in travel. He says he's seeing a lot of Westerners in all of the tourist areas. Mish is touring Central South America right now. And he says he's been talking with a lot of the locals, and they're saying travel demand is a big surge, a big spike, that it's really never been so good. You still got a lot of Westerners traveling down there. So I guess that's helping to offset what was going on with Pepsi. And also we've got Bitcoin spiking over 47,000 right now. Big surge in the last couple of days. It started about 2 days ago. You've still got inflows into the Bitcoin ETFs. Now, early on with the flows in Bitcoin, it was flows out of the Grayscale Bitcoin Trust, which has ridiculously high fees, and into some of the other ETFs. But that has somewhat subsided. You still have people leaving GBTC for the other cheaper options, but you've also got new money coming in, and it is bidding up the price of Bitcoin. You also had a little bit of a surge late last night. I'm not sure if it's directly correlated, but it started around 11 p.m. last night. We had a surge in Bitcoin's price, and that was a few hours after the Putin interview with Tucker Carlson. And Putin made some comments, some pretty aggressive anti-dollar comments, and the BRICS bros really loved to hear that. There was a lot of chatter on Twitter about that, and it was right around an hour or two after the interview was posted. It was a very long interview, so if people were watching, it took them time to get to that point. So it's possible that Tucker Carlson-Putin interview may have actually moved the needle on Bitcoin last night, but the needle was already moving. I'll show you that in the charts. And lastly, we have got Heartland Tri-State Bank, that tiny little bank in Kansas that failed last summer. You may recall that one. Recall I did a video about that when everybody was saying, oh my God, it's another bank failure. It's another chapter in the bank failure crisis that started with Silicon Valley Bank. I remember looking at that and saying, nope, this one smells different, guys. This is not just unrealized losses from U.S. treasuries. This isn't from people not paying their loans. I looked at the bank's balance sheet and I said, the losses are just too big here. They lost way too much money. Even if 100% of people stopped paying their loans, or even if they had 100% loss on their U.S. treasuries, it still wouldn't amount to the amount of money that the FDIC had to pump in here to make these bank customers whole. I said, there's something going on here, some crime, some embezzlement. Well, sure enough, the bank's CEO, Shan Haynes, was charged with embezzling $47 million yesterday in a pig butchering crypto scam. So that one is developing also in the bank crisis. So much going on this morning, so little time. Why don't we shrink my big melon of a head? And while we're doing that, guys, don't forget that like button. It really helps with the YouTube algorithm. If you're new here, hit that subscribe button and that notification bell right next to it and have your coffee with the melon heads every morning as we go through markets. And here we go. The S&P is up 14 points ahead of the opening bell. One thing you might notice is that big green candle right there. That was the revisions to the CPI that were posted by the Bureau of Labor Statistics around 8:30 a.m. Eastern time this morning. The market initially really liked that news, gave back some of those gains, and then right now it's pretty much back to where it was, a little bit higher than it was before that came out. But it looks like the market is saying this was a never mind. A little slight reduction to the December CPI, not really surprising because they only ever revise it down. It wasn't a big surge lower that maybe the market was hoping would increase their odds of a March rate hike. That didn't happen today. So right now the S&P up 13.5 points. We've got the Dow is up 56 points or 0.14% higher. By the way, the S&P above 5,000. S&P 500, 5,000. Congratulations, bulls. Enjoy it while it lasts, because I got news for you. The economy and the stock market are telling us two totally different things. The NASDAQ, meanwhile, up 66 points or 0.37% higher. That is, again, big green candle up on the news of the S&P or the CPI revisions. Gave back about 3/4 of those gains this morning. The DXY slightly lower this morning by 4 basis points. Opposite of what stocks did. We initially had a weaker dollar on the news of the CPI revisions. Then it came right back up, reclaimed about half of those losses. Dollar's a little bit weaker because I guess the dovish case for the Federal Reserve got a little bit stronger on this news, but not a lot. It's only 4 basis points. Again, kind of a non-event this morning. Looking over at the bond market, we got the long end of the curve is a little bit lower this morning. The 30-year is down 2.5 points at 4.355. The 10-year at 4.164. That's down about 1 basis point. The 2-year is up about 0.5 point at 4.461, and the 1 month at 5.39. Even that is up 1 basis point. So we've got a little bit more inversion in the yield curve this morning. Short-term rates going a little bit higher, long-term going a little bit lower. And let's talk a little bit. Here's the news from MarketWatch about the CPI. U.S. stock futures climbed to session highs after CPI revisions. U.S. stock futures marched to session highs Friday after revised CPI data for 2023 released by the Department of Labor showed the pace of inflation actually cooled faster than previously reported in December. Here's where the main index futures stood. Okay, forget the S&P futures. We just did that. The headline reading for the December CPI was revised to 0.2%. That's the month-over-month number, from 0.3% originally, according to a breakdown of the revisions released by the BLS. So a slight tick down in CPI, not a huge one. Everybody was expecting it to go lower. They don't ever change it higher. They always make it look better for the government. They're financially incentivized to do that. It's one of the reasons why CPI is kind of a garbage data point, even though the market hangs on its every word. Looking over at commodities, though, we got gold futures a little bit lower this morning. April gold futures at $2,043. That's down $4, 0.2% lower. March silver futures at $22.65. That's up a penny or 0.05%. Platinum and palladium are both down 1% and change this morning. March crude oil futures for West Texas Intermediate at $76.83. That's up about 61 cents or about 0.8% higher. Oil futures have been clawing back a little bit. They're a few bucks higher this week. The situation in the Middle East has been escalating. I haven't been covering it as closely, but there has been plenty of shooting back and forth in Iraq and Yemen. That situation continues to get worse. Oil still, though, treading water in the mid-70s because demand destruction is still an equally powerful force to supply disruption happening simultaneously. And check out the chart of Bitcoin. This is going back to about the end of January here on this Bitcoin price chart. $47,445 as of the making of this live stream. Currently up about $2,000. You can see here, guys, this started around 10 a.m. on Wednesday is when this run in Bitcoin really got started. Now, the reason I mentioned why the Putin interview may have moved the needle, if you look last night, it was around 6 p.m. Eastern time, or about 1800 is when the Putin interview was released. That's about right here in this chart. And you can see it was about 2 hours later that we got this big green candle up in Bitcoin. Sorry for my sloppy drawings here. So it took people about 2 hours. Again, the interview was about 2 hours long. I'm not sure where in the interview that Putin's comments about the dollar were found. I mean, if you listen to Vladimir Putin talk and then you run out and buy Bitcoin, good luck with that, I guess. I personally didn't really get that takeaway. Look, the dollar is being bludgeoned. There was no new news in that interview. We all know that the U.S. is abusing the exorbitant privilege of having the world reserve currency. We all know sooner or later that's going to come back to haunt the United States. My guess is it's probably going to be later, because even though the U.S. has abused the dollar tremendously in the last few years, if you look at the rates of inflation all over the world, the inflation was worse than the U.S. because we devalued the dollars. And then in response, all the other countries that needed those devalued dollars even more, well, they devalued their own currencies even harder in order to get less valuable dollars. So really, we just exported our inflation and made things worse for everybody else. It made the dollar stronger relative to the other countries' currencies, not weaker. So I've never really been a big fan of this whole BRICS train. I get the motivation, but de-dollarizing, in my opinion, has always struck me as that teenager or that 20-something who's like, to hell with this, I'm going to move out and go get my own place. I'm going to do my own thing. I don't need mom and dad. It sounds great. And then you go try it, and it sucks because life is hard. And getting off of the US dollar sounds like a great idea until you try it and you realize, wow, this is really hard. And look no further than the oil trade between Russia and India for how that's going, because India is saying, we're not going to pay for our oil in rubles. To hell with that. We want to pay in rupees. And that worked for a while. And then the Russians are saying, well, now I've got this massive pile of rupees that I don't have anything to do with. They're not accepted anywhere else. So what am I going to do with them? And Russia says, nope, you need to pay in gold, or you need to pay in rubles. And the Indians are saying, no, we want to pay in rupees. And well, if you had a world reserve currency, it'd be a lot easier to pay for that, wouldn't it? So again, de-dollarizing, easier said than done. Now, as far as the spike in Bitcoin, I want to show you this chart courtesy of Zero Hedge this morning. This is showing Bitcoin ETF flows over the last couple of days. All right, now here's zero right in the middle of the chart. This big blue bars down in negative territory, that is money leaving the Grayscale Bitcoin ETF, formerly the Grayscale Bitcoin Trust. Their fees are like 8 times as high as the next highest ETF. So people have been selling GBTC, and then that money has been flowing back into all these other bars that are in positive territory. That's all the other Bitcoin ETF options. And you can see for like the first 10 days or so after the announcement of the Bitcoin ETF, those flows were pretty much equivalent. Really, you had the other ETFs were just cannibalizing Grayscale. That's all that was going on. You didn't have any real like net inflows into Bitcoin. You actually had a couple of whales were selling Bitcoin when that news was first announced, and so the Bitcoin price was dropping. But if you'll notice, going back just a couple of days, right around February 5th, 6th, 7th, is when that swung, right about the time this move in Bitcoin started to go, look back at the chart. It started right here around February 7th is when the needle really started to move. Well, that coincides with when the selling in Grayscale wasn't suddenly so powerful, but we had more inflows into the other ETFs. In other words, the ETFs was net positive for inflows into Bitcoin. And that happens right as Bitcoin price starts to move forward. So that makes sense. I think it's ETFs that's really driving Bitcoin price right now. It took a couple of weeks to get here. The Bitcoin ETFs was a non-event in the first few days. It was actually a negative event because people sold the news. Well, now that is starting to swing, and you can see the positive inflows into the other ETFs more than outweighing the negatives out of Grayscale. Also, real quick, I want to check in with China here. We had another good day for the CSI 300 yesterday. That was up about 0.5%. So that is 4 green candles in a row for the CSI. So it's possible some of these efforts replacing the regulators and some of these liquidity provisions that the Chinese central bank and the government have been taking, maybe they've arrested the decline in Chinese stocks. Maybe this is just a dead cat bounce. We don't know yet. Hong Kong, meanwhile, another down day yesterday. It is a green candle. It just means it closed higher than it opened, but it did close lower than the prior day's close. So we've had 3 negative days in a row in Hong Kong. So you still have that money is leaving via Hong Kong, even though China is putting pressure on their onshore investors not to hit that sell button, if not outright taking away the sell button. So I'm not going to say the collapse in China is over yet. It's slowing. It may be about to reverse. It's a little early, though, and again, I'm not trying to catch that falling knife. Now, here's the top story this morning. The ECB, the European Central Bank, warns banks of consequences for poor property risk management. Commercial real estate is a key focus for ECB supervisors. This is the European Central Bank is saying, yo, banks, we know you've got commercial real estate problems on your balance sheets. We know you guys aren't being upfront about your exposure. It's time to start setting aside some money for those losses or start unloading those assets. You better do it fast. Otherwise, we are going to crank up the capital requirements on your bank and we're going to hurt your business. Contagion is spreading to European banks as values plunge. The European Central Bank is signaling to lenders that they may face higher capital requirements if they have an insufficient handle on risks they face from commercial real estate. That's according to people familiar with the matter. There's those anonymous sources again. The watchdog is placing greater emphasis on the management of commercial property risks in a dialogue with banks that comes before the annual bar for their financial strength is set. That's according to those people, again, who asked to be anonymous. While individual requirements would probably only apply next year, senior officials view the early warnings as a way to limit losses. Now, this latest escalation follows pressure from the ECB last year that people familiar with the matter say contributed to the banks booking higher provisions for possible losses on CRE. So all these banks that recently reported, and they're all reporting these bigger loss provisions, it seems like that is the result of this dialogue that's going on behind the scenes where the European banks, the central bank is telling the member banks, hey, you guys better set aside money for losses here. We know this is a big problem. You guys are pretending like it isn't. You better set aside that money, otherwise we're going to crack down on you. And then all of a sudden, we've got Deutsche Bank, Deutsche Pfandbriefbank, and Julius Baer. All these companies are announcing their losses. It's because the central bank is saying, no more extend and pretend. It's time to get out in front of this. Senior officials say that while the ECB's intensity hasn't changed, the materialization of losses means the watchdog's approach is evolving. Now, here's what Bloomberg Intelligence says. Real estate distress is causing shockwaves at select lenders, from NYCB in the Americas to Azora in Asia, Julius Baer and Deutsche Pfandbriefbank and EMEA. All right. Again, Julius Baer, $680 million in losses, plus a new CEO over commercial real estate. Azora swinging to a net loss for the year. Their shares sold off 20% in a day. Deutsche Bank, $133 million in provisions for losses in commercial real estate. Deutsche Pfandbriefbank, $232 million in loss provisions for commercial real estate. All right, so this contagion is spreading. Of course, now they're saying, even though all these banks from 3 different continents are having trouble, they're saying, but the rot doesn't look global or systemic. It's amazing. In the next sentence, after they talk about banks in America, Japan, and Germany having problems from commercial real estate, they're saying, don't worry, it's not global or systemic, even though we just told you it was global and systemic. You got to love these guys. However, that's thin comfort with office landlords whose bonds are no longer riding high. Sector fundamentals, though not especially concerning, may offer limited reassurance. Provisioning could rise, dampening profit and denting capital. They're saying expect more banks to post losses from commercial real estate in the U.S., and especially more U.S. regional banks. Let's check in with them. New York Community Bank this morning is actually green. How about that? They're currently trading at 423, up 0.95%. This thing has been so volatile. Yesterday, it was down 15% at one point, up 16% at another point. It ended up closing down 6% yesterday. I think it's just a matter of time before this bank, they're either going to end up bought out or end up in FDIC receivership. I don't know which one. But we're going to hear more about the corruption at NYCB, everything that I've been looking into with this public housing in New York City. What a just disgusting pig trough for people to steal money from taxpayers and poor people. Good God, the corruption in that city is unbelievable. We'll hear more about that in the weeks ahead. And this story, this one getting a little bit of closure on this, not quite closed yet, but this one started last year in the midsummer when Heartland Tri-State Bank failed. The Kansas banker charged with embezzling $47 million to buy crypto. The former CEO of the Kansas bank was charged with embezzling $47.1 million from the lender to buy cryptocurrency as the tale of tiny Heartland Tri-State Bank and its failure unfolds. Shan Haynes, who led the bank before it was shuttered in July, also took money from a local church, according to a filing by prosecutors on Friday in federal court in Wichita. The closure rocked the tight-knit community of Elkhart, a far-flung city of about 1,800, where regulators and investigators descended last year and where the residents who invested in the bank face losses. And this appears to have been a pig butchering scam. The brief filing, known as a criminal information, is short on details, but Brian Mitchell, a 59-year-old local businessman and farmer and client of the bank, believes Hans may have been the victim of a scam himself. Mitchell, who played a key role in uncovering the alleged embezzlement, says he grew suspicious when Haynes asked him for a loan to help him get his money out of a crypto investment in a scheme called pig butchering, where victims are lured into giving ever more money like pigs being fattened for slaughter. Guys, I get messages like this from people all the time. I don't know how to break it to these people. I feel terrible. But people say, hey, I sent money to this crypto firm, and now they're saying, oh, they want to release my funds so I can withdraw my money. I'm up over 500%, but I need to deposit another $10,000 as margin so that they can clear a wire transaction to my bank. That is a textbook pig butchering scam. They will always, you'll wire them money, and then they'll create your fake account. They'll show you fake massive gains in your account, and then they'll ask you for more money before they disappear with everything. That is a pig butchering scam. I get it in my comments all the time. I feel terrible for these people, giving them that news like, yeah, you got ripped off, guys. Sorry, don't send these people more money. And here we go. The CEO of a bank fell for this. All right, so some of these scams are pretty good, guys. And like, look, this guy, he was the chairman of the Kansas Banking Association. He was the CEO of a bank, and yet he stole tens of millions of dollars from his bank and even his church. Caution tale here, guys. All you people out there who are like, there's no way a company as big as NVIDIA could ever do anything fraudulent, even though they have a long history of doing things fraudulent. There's no way somebody who's the head of the Kansas Bank Commission could ever do bank fraud. Well, there you go. Don't ever let the resumes of these people blind you to what they're capable of. At the end of the day, they are people subject to the same flaws that every person is born with: greed, self-interest, manipulation. And some of them are just innocent people who get caught up in scams, and they're so embarrassed and so overcome by the shame of it that they turn into crooks themselves just out of pure shame. It can happen to anybody. So, all these people who flash their resumes and say, oh, I'm such a big deal, I'm such a big guy, look at all my followers, look at all my everything. Don't for a second think these people are incapable of fraud. Refer to this story, guys. This guy testified in front of Congress like 5 or 6 times. He was a national champion of community banks, and he embezzled tens of millions of dollars. All right, let's shift gears a little bit to Pepsi earnings. Pepsi reports rare revenue miss, but profit beat and a higher dividend. And this is, watch that Ozempic story, guys. I don't know if that's just a deflection here or what, but shares of Pepsi slumped pre-market Friday after the beverage and snack giant reported a surprise decline in revenue, marking the first miss of expectations in at least 5 years amid weakness in North American business. Again, guys, the inflation story, how do you get a decline in revenue from a company like Pepsi, which is pretty much like a staple consumer goods company, who raised prices all last year, and yet they're posting a revenue miss? That means the solution to high prices is high prices. People can no longer afford that. So you probably got the Ozempic trend going on here, and you probably have more people reaching for that bottom shelf generic brand stuff also, skipping over the Pepsi and getting the Mr. Pip or the Dr. Pip, whatever you call that generic soda brand. Revenue slipped 0.5% to $27.85 billion, while the consensus called for 28.4. That was the first time revenue didn't beat expectations in at least 5 years. That's based on available data going back to February of 2019 when results for the fourth quarter of 2018 were reported. Category growth rates are normalizing as consumer behaviors largely revert to pre-pandemic norms. Net revenue realization moderates as inflationary pressures are expected to abate. In other words, people can't afford Pepsi anymore, so they're not buying it. Now, check out some of these numbers for business segments. Among the company's business segments, PepsiCo Beverages in North America revenue fell by 2.4%. Frito-Lay North America revenue declined by 3%. And look at Quaker Foods North America revenue sank by double digits, 15.7% decline in Quaker Foods North America. Now, my initial thought to that was, oh, great, people can't even afford freaking oatmeal anymore. And then I realized Quaker Foods, that they also make chewy granola bars. A lot of that sugary crap also comes out of Quaker. So it's possible you've got the Ozempic thing is playing a role here. I mean, that could contribute to declines in the soda sales. But you also have people just can't afford the higher prices of inflation, and they're buying less here, I think. Now, this is another unique thing. The only geographic region that reported growth was Latin America, where revenue rose 17.6% to $3.97 billion. And my moderator, Mish, swears that is the result of Westerners traveling to South America, where he is saying the locals are telling him that they have never seen it so good as far as tourism goes. So even though people are hurting from inflation, even though we're seeing that in a lot of aspects of the economy, a lot of people are still traveling and still spending. Maybe that's why Pepsi's Latin America sales were so good. Looks like Pepsi stock right now is up just a fraction of a percent. Oh, nope, there we go. It just swung to a loss, down 2% right as the bell opens here. Pepsi not looking so good this morning. Last one of the day, Turkey's central bank chief quits, citing the need to protect her family. Turkey's central bank governor Hafizge Erkan resigned on Friday, citing a need to protect her family amid a reputation assassination, and she was swiftly replaced by a deputy who's expected to carry on her tight policy stance. I don't know so much about that last part. President Recep Tayyip Erdogan, who hired Erkan 8 months ago to pivot away from years of inflation-fueling low interest rates to a more orthodox policy, named Deputy Governor Fatih Karahan to take the reins, the official Gazette said early Saturday, 2 hours after the surprise resignation. And right away, we've got this one in BNE and Telenews. Turkey's new central bank chief rules out more rate hikes in the near term. So we could tell they sacked Hafizge Erkan because she was going to keep hiking rates. She wasn't done fighting inflation, and Erdogan just said, no, the way you fight inflation is lowering interest rates. Here's a hint. That's not how that works at all. But they fired Erkan, and they're replacing with somebody who's not going to raise anymore. The Turkish central bank's monetary policy stance is tight enough as things stand, and the regulator does not see additional rate hikes as necessary. That's according to newly appointed central bank governor Fatih Karahan on February 8th at a press briefing after Hafizge Erkan resigned. It stated that the current policy rate level would be maintained until there was a significant decline in the underlying trend of monthly inflation. And I just want to show you this chart here, guys. Here we can see in red, that is the calculated inflation in Turkey. And then in purple is the official rate of inflation in Turkey. And lo and behold, the official government statistics are significantly lower than the observed statistics. Isn't it funny how that works? Almost universally across the globe, we do it here. They do it in these banana republic countries, and they do it in Turkey. They do it everywhere. They lie about inflation to make themselves look better. And you can see here in July of last year, that's when Hafizge Erkan took over. She has been aggressively raising interest rates. And, well, it hasn't done a lot to arrest the trend of inflation. It did stop it from rising, but it hasn't exactly come down either. But they are now onto their sixth head of the central bank in 5 years. Just keep firing people until, I guess, inflation does what you want. That's their approach over in Turkey. Good luck with that, Erdogan. Erdoganomics strikes again. And I just want to say thank you very much to Balsac Teabag. Thank you for making me say that, BTB. He says, thanks for keeping us informed, Jack. Much appreciated. Yeah, thanks for that. You almost made me say that one live on the air, but I do appreciate the super chat and support of the channel. Thank you, sir, very much. And you are welcome for me keeping you informed, sir. Steve Woitis says, for melonheads that pay attention to commodities, natural gas futures are at multi-decade lows. Yeah, I'm sure that announcement of halting the licensing of LNG plants in the U.S. probably contributed to that decline in natural gas futures. Plus, we had a pretty warm first few weeks of February. I'm sure the weather is playing a role there, Steve, but we've got cold weather is coming back to the Northeast, so maybe that decline in gas futures is nearing an end. Be careful, guys. They call that the Widowmaker trade for a reason. Natural gas futures are notoriously volatile, and that is just a big, giant market. I got enough of that one last year. I'm staying out of that one myself. Thank you, Steve, for the super chat, the support of the channel. And thanks to my brother Travis from Real Estate Mindset. To my bestest friend, Jack. Oh, shucks, Trav. Thanks, brother. I see you working like crazy. Keep it up, brother. I can't call it work, Travis. I love doing this stuff. I mean, I just can't call it work. I work more than I ever have in my life right now as far as the number of hours and time I spent chopping away at this stuff. But it's fun. It's strange. It's weird. You know, you dig into one of these stories and you're finding corruption somewhere and you just keep peeling. And then you find something else and you peel again and you find something else. You're like, oh, my God, these crooks are everywhere. Every rock you flip over, these cockroaches, they scurry. And every now and then you catch them in the act, and that feels good, Travis. I like it. It's fun. And, well, thank you, brother. I appreciate the kind words. Awesome job on that round trip around the country, and it was so great to meet you in person. Thank you, sir, for the super chat, the support of the channel. Thank you, Uncle Fedster, as well. Happy Friday, nobody special. Happy Friday to you, Uncle Fed. And reminder, it's Friday, so if this afternoon at 3:15 p.m. Eastern Time, I will be back for my weekly wrap-up live stream. Thank you for the reminder and the support of the channel, Uncle Fed. And thank you, JJ Watt, who says, thoughts on Fed going Zerpenburg and gold selling off. We do live in a twilight zone market. I am not so worried about the price movement in gold at this very moment, JJ. I think gold and, you know, the shiny cousin silver, I think they are just fine. I do think Zerpenburg is probably inevitable here. It's a choice, and I'm pretty sure the Fed has already telegraphed that that's what they'll do. They've already started to pivot. Or at least verbally, they've started to pivot. They already said last year when the bank started failing that they will turn on the fire hose and pump liquidity into the market the second it suits them to do that. And so I do think they are going to Zerpenburg again eventually. And by the way, if you guys don't know, ZERP, zero interest rate policy, and Burr is the sound of Uncle J-Pow's money printer cranking out C notes. So I do think Zerpenburg is coming back. I do think when the time comes, when these commercial real estate losses pile up and get big enough and the banks start to fail, the FDIC will step in, they'll bail them out, and I think the Fed will start buying up their assets. They'll inject liquidity. Maybe they'll extend the bank term funding program in the last minute. They'll call it an emergency extension, or they'll change the name to some new acronym. I don't know what they're going to do, but I do think Zerpenburg is coming back. When that happens, you will want to own gold, JJ. So don't get so hung up on the day-to-day price movements in that one. And thank you, sir, very much for the super chat, the support of the channel. Thank you, everybody, for having your coffee with the Melon Heads this morning. I hope you guys have an awesome day. Thank you, guys, for the super chats. Thank you to my Patreon supporters for supporting the channel. Links down below to all that good stuff. I'll see you guys this afternoon at 3:15 p.m. Eastern Time. And everybody, till next time, live small and dream big. Oh, hi, Mom. Hi, Dad. Love you guys. Almost missed that.